Now, before we begin, it's my pleasure to introduce our speaker for today, Dr. Satya, the managing editor of Palm Oil Analytics, which is a company where he's doing a price reporting agency covering daily prices, news, and data based in Singapore. And earlier on this year, Palm Oil Analytics achieved a significant milestone by being acquired by Fast Market. Dr. Satya has been in the commodity information business for over 20 years. Besides that, he also serves as an economic advisor to the Malaysia Palm Oil Board, which is the MPOB. And he's also a regular speaker at palm oil conferences. Without further ado, I'm delighted to hand over the presentation to Dr. Satya.
So, um, so thank you very much to all of you who have joined. Good evening, good afternoon, good morning from wherever you are joining. First of all, thank you to Excel for inviting me to speak at this event. I understand this is a learning event, so I will make it in that, take that perspective and offer some insight on how and why fundamentals are important in understanding the CPO price dynamics. So as CY mentioned, my name is Satya Varka from Palm Oil Analytics, which is now called Fast Markets Palm Oil Analytics. And you can see my email address and the website of the company where you can get more information on what we do and get access to all the available resources there. So there's plenty of resources which you can take a look at. So Palm Oil Analytics is a publisher of palm oil price, news, and data. So we are not traders, we are not brokers, we are not producers, but we are independent publishers of palm market pricing, market commentary, and so on. We aim to become an essential provider of global palm oil market news and data, and be a portal where global audience can come and join and look at the pricing. So let me start with speaking a little bit about the vegetable oils market. What are the leading vegetable oils consumed globally? So there are many types of vegetable oils, as you would know, ranging from coconut oil, cottonseed, olive oil, palm kernel oil, peanut, rapeseed, bean oil, and sunflower seed oil. So these are the major oils that is consumed globally. Palm oil is the largest consumed edible oil in the world, followed by soya bean oil, rapeseed oil, and sunflower oil. But what's interesting is that if you walk into any supermarket and look at the ingredients at the back of the bottle, like this picture here, you will see most of these oils are blended. They are not just pure palm olein or pure sunflower oil, but most are blended. The blend could be many different types. They could be palm olein and soya bean oil, sunflower oil and rapeseed oil, and many others. There are, in fact, palm olein blended with olive oil too. So palm olein is the cheapest, and then olive oil is the most expensive one. So you can have all type of blended oils. And this really depends. It's sold in the markets depending on the taste preference, depending on the price, depending on the clouding point, which is the appearance of the oil at certain temperatures. So when a blender decides to blend this oil, what are the factors they look to in order to buy? Do they buy based on the cheapest? Do they buy based on their preference? And we will look into that a bit deeper in the next slide. So, but it's worth bearing in mind that not all the oils that are produced, not all the oils that are produced for the purpose of consumption. Okay. In fact, 76% of global soya beans that are produced goes into animal feed. So soya beans are crushed, and the crushed soya bean is called soya meal, which has high protein content and is used for feeding the animals. So globally, soya bean production is mainly used for protein to feed the animals instead of used for human consumption. So this is a bit opposite to palm oil, where about 80% of the production of crude palm oil goes into palm oil, which is used as edible oil. So likewise, in the rapeseed oil segment, about 50% is used for animal and about 50% goes into human consumption. And you can see the pictures of on the most left side of your screen. My screen is the soya beans. Once it's crushed, it's pulverized into powder, which is then made into pellets for consumption of animals in the form of protein pellets. And the picture in the middle is the black, gray looking, is a rapeseed, which is crushed and then turns into meal, which is then again used for animal consumption. So which seed to crush? So how do blenders decide which one should I buy to blend? Which one should I source in order to produce the best-selling oil? So there are many different factors. So one of the main factors is pricing, right? Pricing. But before pricing, I just want to highlight other factors. So it depends. If we choose soya beans, can I sell the soya bean meal? That's the one question you'll be asking. Because you don't want to take soya bean, crush the beans, get the oil. What do you do with the balance of the meal, right? So risk management, can I manage my risk, especially with the sunflower oil, where 70% of the shipment comes from the Black Sea. So there is a huge problem with the shipment, insurance, security of the product. Can I manage the risk of the price and the cargo? Availability. So it's important to remember that soybeans, rapeseed oil, canola, sunflower, all these soft oils are seasonal crops. But palm oil is not a seasonal crop. Palm oil is a perennial crop. That means you always get production. But when it comes to soft oils, the availability changes from year to year, right? Depending on the weather, depending on the fertilizer, depending on the area. And in the United States, it also depends on the farmers switching between beans and corn. If they're planting more corn, then less beans. If they're planting more beans, then less corn. So that's another factor that's taken into account in order to decide which product should blenders, traders buy. As I said, taste preference earlier. In some countries, the taste of certain type of oils feature prominently in their palate. Substitutes. So if I buy this oil, can I also easily switch to another oil when it comes to packaging and distributing to the supermarkets? Refining margin, right? So what's the difference between my crude and palm oil? So there's a price difference. So if the difference is very narrow, you're making very little money. So again, refiners, blenders will make a decision based on the refining margin, shipment availability, and finally pricing. So when we speak about pricing, there are two types of pricing. One is futures and the other is cash. Cash means you go to a supermarket, you pay the money, you get the bread, you get the oil, you get your product. So that is simply spot transaction, where you pay the money, get the goods. Willing buyer, willing seller. However, in some commodity markets, there is a futures contract available. What is a futures contract? A futures contract is simply a legalized document which allows the buyer and seller to come to an agreement on a predetermined price, tonnage, and delivery point together with delivery period. So that's what a futures contract is. And in the palm oil market, there are two types of futures contract. One is FCPO and the other is FEPO. Both available on Bursa, Malaysia. So I really want to talk in the next few minutes on the futures market pricing governing both FCPO and FEPO. FEPO was launched just about last year, which is East Malaysia palm oil contract, which is available, and the trading time opens at 9 a.m. Malaysia Singapore time, whereas FCPO opens at 10:30 a.m. Malaysia Singapore time. So these prices are available on the Bursa Malaysia website on a delayed pricing by 15 minutes. But if you want live pricing, you can also get it from the list of information providers or vendors list that's available on Bursa Malaysia website. And on that website, Bursa Malaysia has listed all the different vendors who can stream the live prices of FCPO and FEPO. So let's get back to the futures market pricing. So when we speak about pricing, there are several components that make up a price. Okay, so when you hear a price of CPO is 3,700 ringgit per ton, what does it mean? It means this price is made up of several factors. Number one, it's based on fundamentals. When we say fundamentals, we mean it is dependent on supply and demand in the market. Secondly, it could also be based on technical. So there are people who draw charts, draw the resistance curve, the support line, and then they study the charts, and then they make a call. Hey, I think the price should be this much. I think the price should be this much. So this price is also made up of some technical analysis. And thirdly, prices are also based on sentiment. So you just feel like, I think the prices are rising. I think tomorrow it's going to hit 3,800 ringgit. So you have a feel. So prices are also fueled by market sentiment. And this is what you call, people have bullish sentiment, people have bearish sentiment, people are neutral in their sentiment. And then speculations. So speculation is a big driver. So a lot of people are, some people are triggering buying because they want to just speculate in order to make short-term profits. And this is happening a lot in the Chinese exchanges, on the Dalian exchange, on the Shenzhen, on Zhengzhou exchange, where the volume is very, very high. There's a lot of speculators in the market trying to make a profit quickly. So a price is also made of a bit of speculation in the futures. Seasonal. So sometimes prices are high because production is low, and sometimes prices are very low because based on seasonal production, supply is very, very high. And although palm production, CPO production is perennial, which means there's production every week, there are periods, months in which production is at its peak and production when it is at a lower peak level. It's like in Malaysia, CPO production peaks in August, September, and October, whereas in Indonesia, peak production is in September, October, and November. And based on that, the prices will move accordingly. And also based on substitute. So you cannot just look at palm pricing by looking at CPO fundamentals alone. We have to look at CPO in relation to other oils, because there are other oils in the market that is also trying to capture a market share. Trying to capture the market share. And these oils are, as I described earlier, could be bean oil, could be sunflower oil, could be rapeseed oil. These are the main oils that compete with palm oil. Okay, So today I want to speak about the first point here, which is fundamentals. I really want to speak about fundamentals. So I'm not going to cover technical analysis, sentiment, how to read speculation, or what is seasonal or substitute. I really want to focus on fundamentals only. So when we speak about fundamentals, what does it mean? It means that we are interested in supply and demand variables. So there are many, many variables. There are a multitude of variables. And I'm just highlighting some key variables here. So number one, production, weather, workers, yields, related edible oils, stocks, fertilizer, and many others. So I highlighted some in green to show that these are the main ones. These are the main ones that will have an impact on the supply and demand this year. Okay, so I may not be covering all of this because of time constraint, but you're very welcome to drop me an email or drop me a message to my WhatsApp, which I will show a bit later for further information or for further references. So these variables govern pricing in many different ways. Okay, so you cannot escape from fundamentals. Yes, CPO prices will move according to speculation sometimes. Yes, CPO prices will move according to some technical analysis, but at the end of the day, all pricing levels should converge to the fundamentals. And when we say fundamentals, it must have a basis. Prices should move according to a basis, whether it's weather, whether it's stock levels, production, or consumption. So when do we get to know which data is coming out when? So fundamental means it's based on data. So on the Palm Oil Analytics website, we have put all the dates on which critical price sensitive data are going to be released. So tomorrow is the 10th of May, and on the 10th of every month, the Malaysian Palm Oil Board, MPOB, will release the data on Malaysia supply and demand at 12:30 p.m. Malaysia Singapore time. So when the data comes out, the global market will be watching, will be looking to get a sense of the fundamentals. Where is production in April? Where is stocks at the end of April? No doubt a lot of these estimates are already out there in the market. Bloomberg publishes estimates, Reuters publishes estimates, and the estimates are already available. Yes, markets does price in these estimates well before the release of the MPOB data. But we are looking for some surprises. Is production higher than expected? Is production lower than what was shown in the polling data? Like, for example, tomorrow, focus will be on where is production. According to Bloomberg and Reuters, production is nearly unchanged. But Malaysian Palm Oil Association, MPOA, thinks production is much, much lower than we think, that we estimate. MPOA thinks production should be as down as 8%, right? So that means there will be an impact on stock levels too, right? On stock levels too. So that's something to watch. So that's what we really mean by fundamentals, looking at data, looking at the basis in order to make informed decision on where pricing levels should be. So we're not randomly making a prediction. You're not randomly making a call, because at the end of the day, the idea is that prices should converge to fundamental. And this is not just true on CPO, but it's also true on the equities market, on the currency market, on the commodities market, and so on. If prices do not move according to fundamentals, then that's when we create a bubble, which means prices are artificially inflated. And the danger then, as you know, if the bubble is burst, then many people will be caught in the wrong position. So moving on a bit further, so what are we expecting on the production side of palm oil? So palm oil is expected to show a small increase globally. And as you know, Indonesia is the largest palm oil producer in the world, accounting for nearly 50 million tons, followed by Malaysia, just under 20 million tons. So together, Malaysia and Indonesia account for about 84% of global CPO production. But I want to make the point that although Indonesia is a much more than double larger producer than Malaysia, the global market, and you should look at Malaysian supply and demand data that comes up from MPOB. So not Indonesian data, but Malaysian data. So why? Because Malaysian data is timely, it's transparent, and it is reliable. Indonesian data is somewhat reliable, but it's always late, and the market does not. So when the data is late, the market doesn't have time to price it in. The data is gone already. The main fundamental you should look at when it comes to Indonesia is Indonesia domestic policy and Indonesia biodiesel policy. These are the two main areas for Indonesia. But fundamentally, monthly basis, Malaysian palm oil board data governs the pricing movement of CPO globally. So when the data is released tomorrow, you can go to the website, MPOB website, and check the data. If you don't want to check on that website, you can also see, I will post it on my Twitter. You can also take a look at it, and also available on Palm Oil Analytics website. So this year we're expecting a small 3% rise in palm oil led by Indonesia, no surprise there. But there will be a big reduction in olive oil coming out from Tunisia and Spain, mainly because of the drought weather that has impacted the crops over there. Rapeseed oil is also expected to see a big surge, mainly on favorable weather in Australia. So, as I say, we cannot look at palm oil by itself. The closest substitute to palm oil is the most used edible oil, is soya bean oil. Okay, so these two oils move in tandem. And here I give you a chart, the red line showing rapeseed oil that is listed on the Zhengzhou exchange in China. The blue line is the soya bean oil on the Dalian exchange, and the green line is the palm oil also on Dalian exchange. And you can see these oils are closely correlated to each other. So we cannot ignore other oils. We have to look at the behavior of other oils in order to understand crude palm oil. So here again, I show the spread between crude palm oil on Bursa Malaysia, third month. Why do we choose the third month? Because third month is the most actively traded contract on the Bursa Malaysia, compared to soya bean oil second month on CBOT. And you can see it's closely correlated, but somehow the correlation breaks down somewhere in June, July 2022. So there is no connection between these two. Why? One main reason is because in the United States, soya bean oil is increasingly used in biodiesel blending. Remember, soya bean oil is the biggest raw feedstock for biodiesel production in the United States. So that's one reason. About 40% of soya bean oil supply in the US goes into biodiesel. Whereas in the CPO market, 80% of crude palm oil, which is then blended into palm oil, which is then refined into palm oil, goes into edible oil consumption. So the market segment has shifted significantly since middle of last year. So what does it tell us? It tells us that the connection between these two may not be very relevant on the futures market. On the futures market, it may not be relevant. Although every morning before the FCPO opens, many people look at soybean oil behavior on the CBOT overnight. So if soybean oil closed higher, we expect CPO to open higher. If bean oil closed lower, we expect CPO to trade lower for the day. But in the long term, you can see from this chart, the correlation is not very steady after middle of last year. If this persists, if this continues, then CPO traders will then have to look at other clues. Could be Dalian, could be rapeseed oil, and so on. Okay, next, so this is futures. I just showed you the futures. So the next slide is looking at the cash price. So in the cash market or physical market or the real market where you have the goods transacted, if you look at the two most consumed edible oil, palm oil and soybean oil, the correlation is very, very strong. The correlation is very, very strong. But what you observe here is that since March of this year, the price of palm oil has become slightly more expensive than bean oil. So this is a bit unusual because palm oil is the most consumed and the cheapest oil among all the edible oils. But now we are faced with a situation where palm oil is not the cheapest anymore. Palm oil has become more expensive than bean oil. It's trading almost on par with sunflower oil. So it's a problem for Malaysian exporters because it's difficult to find markets that will source palm oil, especially markets like India and Asia Oceania, where palm oil is seen as slightly less quality, lower quality compared to other oils. So if this trend persists, where palm oil is more expensive than other oils, then Malaysian exports will suffer. Malaysian exports will suffer. Okay, let's look at the other chart. So here, I put all the line charts together, so apology, it's a bit busy. But what you can see is that the golden line is the CPO on Bursa Malaysia, is the cheapest among all the oils in the long time series here. And it is also the most used oil among all the oils. But that doesn't mean that palm CPO will remain as the most competitive oil. It can either move slightly higher than the other oils, or it can drag the other oils lower. So the main point in this chart is that we have to look at other related oils on other exchanges, which are all available freely on the terminals. So when we look at CPO, which is the most sensitive oil, which is the most sensitive variable? The most sensitive variable for CPO is Malaysia end month stocks. So here I have used an estimate number for April, although the actual data will only be out tomorrow. And we think the stock levels will be lower from March to about 1.25, 1.3 million tons, so which is very low. So that means there is scope for prices to move even higher than where we are today. And you saw the prices recovering today, recouping the losses, moving higher still. So you can draw all these charts. I mean, MPOB has kindly put all the data freely available on its website. So you can do your own analysis. You don't have to agree with this way I presented, but what you can agree, I hope, is the correlation, the negative correlation between stocks and prices. Higher the stocks, lower the prices. Okay? And lower the stocks, higher the prices. Okay? So that's a very stable relationship, negative relationship in the CPO market. So again, I want to show you the same data, but this is showing you over the longer time period. So last year, we had a record high prices in April. In April of last year, I think it was on 29th of April, prices hit 7,000 ringgit per ton. Very high prices. At that time, the stocks were just at 1.5 million tons. So low stocks, prices up. But these was prices also shot up because Indonesia banned the export of palm oil. Because Indonesia banned the export of palm oil, global buyers shifted to buying from Malaysia, offering Malaysian producers a windfall with prices rising higher, exports booming, and stocks depressed. So the question is, will we see 7,000 ringgit again? Remember, stocks are expected to be about 1.5 million tons. That's what we think tomorrow. It may be slightly higher. So it's not a big difference between 1.472 million and 1.52 million tons. But we do not think CPO prices will reach 7,000 ringgit. And there are reasons for that. Number one is, as I described previously, palm oil is no longer the cheapest oil. So either palm prices have to fall lower or bean oil prices have to rise higher in order for palm oil to capture a discount of 70 to 100 US dollars and above. Okay. So next slide is showing you the difference in the long term between Indonesia and Malaysia. Red line showing you the stock level movement in Indonesia, and then the horizontal dotted red line is the average Indonesian stock levels. You can see stock levels shot up in March of last year in Indonesia when the government imposed a ban on the exports. So stock levels shot up, and since then, Indonesia have been aggressively exporting, helping to reduce the stock levels. And that means Malaysia has been losing some market share in India and in Indonesia. So Indonesian stocks rose to record high. Malaysian stocks have somewhat been about flat. But the main level in Malaysia is 2 million tons. So are we above 2 million tons or below 2 million tons? If we are below, the market is very, very tight. The market is very, very tight. And that's what we expect to see tomorrow. Okay? And I think that's one reason why prices recovered very rapidly today ahead of the data, and also because Malaysia is expecting a good export month in May after a dismal performance in April. Okay, so production. So when we look at the Malaysian CPO market, we must understand or must have an idea on where Malaysian production is going to be. So Malaysian production this year is expected to be at about 18.5 to 18.6 million tons. So not a dramatic, nothing very impressive performance here, because Malaysia has a few problems with supply. Number one, planted area is down. There is constant problem with workers. Mature trees are large in number, and yields are declining over the long-term period. So if you look at this chart, what is very clear is that production has been sideways since 2021, 2022, 2023. Production has not really recovered and done what was the highest seen in 2017, right? About 19.8 million tons. We never really broke out of the 20 million tons. So production this year is expected to be about flat only. No dramatic improvement. And what does that mean? That means there is going to be persistent supply problem. There's going to be a persistent supply problem. as edible oil importing countries increase their consumption, there is not going to be sufficient palm oil available out in the market. Sunflower oil is plenty and available in Russia, but as you would know, the Russian government is hesitant in renewing the the Black Sea Grain Initiative. I think they will renew, but any hesitancy, any termination of those contracts means buyers in the Middle East, UAE, Saudi Arabia, Iran, will increasingly rely on sourcing palm oil in order to replenish their stocks. Okay, so that's the situation in Malaysia. Not great scene for production. Over in Indonesia, we can expect a slightly better scenario. We predict Indonesian production to rise to 50 million tons. That is an increase of 2% or 1 million tons increase. In Indonesia, planted area is rising year by year, right? Unlike Malaysia, planted area is shrinking. And I'll show you a chart on that. Weather is expected to be favorable, although talk and probability of El Nino occurring is raised, especially this month, and we can see early glimpses of not record high, but unusually high temperatures in Thailand, Cambodia, and Vietnam. Will that hit Indonesia and Malaysia? Of course it will. Will it happen? How severe will it be? We will look at these charts. Okay, so Indonesian production is better. Malaysian production is not so impressive. As I said, if you look at the charts, again, the data and all are freely available on MPOB website. You can take a look at it at your own leisure time. But the main story here is that oil palm planted area is on a declining trend in Malaysia. I was just looking at the data earlier. So planted area in Malaysia in 2022 was 5.67 million hectares. 5.67 million hectares. But in 2021, it was 5.7 million hectares. So down by about 63,000 hectares. Why is the planted area declining? One reason is because increasingly more and more oil palm planted areas are converted into townships in Malaysia. And this is not unusual in any developing, urbanizing country. We need more and more land in order to build houses, hospitals, all the taman-taman, to build more roads. And oil palm companies are also diversifying in order to go into construction sector. But also remember, this is an issue because once you lose these areas, it's gone forever. You're not going to get new areas. So in the long term, production in Malaysia may not see 20 million tons. But in Indonesia, the oil palm planted area been on the rising trajectory. Okay, a little bit on El Nino. This is main price swing this year, not just for palm, but for any agricultural crop. And El Nino is here. I think it's here, although the Australian Bureau of Meteorology, the link is here. I've given you the link so you can go and look at it. They offer climate updates every month, so you can also have a look at it yourself and you can analyze it by yourself. And they offer all the different models, what are the readings, what are the probability. So according to Australian Bureau of Meteorology, latest update today, the probability of El Nino occurring is still 50%. So the chances are just 50%, not high, not low. But we live in Southeast Asia, so we know the temperature, we feel it, we can understand, hey, is this hotter than usual? Okay. And you can also know from the preparation by the Malaysian government, hey, be prepared for water shortage. Be prepared because the reservoir water is going to be low. And all this gives us some indication. The Indonesian government has also announced, hey, be prepared for the driest year in case there is a forest fire. So all these signals gives us an indication that, yes, El Nino might just happen. So what is the problem if El Nino occurs? Number one, the problem is you will have lower than usual rains. Condition will be very, very dry. This does not have an impact on palm production in the short term, but it will have a severe impact on yields in the fourth quarter of this year and in the first quarter of 2024. So there will be a lagged impact in the end of this year and at the beginning of next year. So that's when the impact will be felt. However, impact on prices will be felt immediately. Impact on prices will be felt immediately. If we hear more, an increase in the probability of El Nino, or if there is a confirmation, yes, we are now in the midst of El Nino, then you can expect prices to be rising sharply to 4,000, 4,200, 4,500 ringgit per ton because of the impact on production towards end of this year, sapping yields, lowering stocks, supporting higher prices. And this chart shows you in May, we are here just into the El Nino threshold. And so far, all forecast shows, you can see all the gray lines, that is the ensemble, all the lines put together. And then the green line is the best fit, showing clearly that we are going to be at plus 2.4 degrees above average. And that means we are stepping into a strong El Nino conditions. And you will feel it when it comes. Okay, what about supply and production and exports in Malaysia? Okay, so production is running slightly lower than exports. So if you look at January to April, based on the estimate numbers for April, production is down by 2%. So if you take January to April 2023, compared to January to April 2022, production is down by 2%. But exports are up by 7%. So exports are running faster than production. And domestic use is down by about 5% during the same period. So what does all this tell us? It tells us that if the pace is the same, then we will be in a situation where you will have a declining stock trend. And that means stocks can even go to 1.4, 1.3 million tons, which is possibility. Again, raising the prospect of higher prices. So you can guess I'm a little bit bullish here when it comes to prices based on where we are. So looking a little bit more on the export side, so we looked at the supply, we looked at the weather. Now I want to just focus a little bit on the demand side. In the next few minutes, then we can stop to take some questions. So when it comes, Malaysian palm oil exports goes to almost every country on the planet. Okay, Malaysian Palm Oil Board used to publish export by destinations, but they stopped doing that now. If you want it, you need to pay to get the data. But I've used Cargo Surveyor data, so we get all this data every 5 days. So we have a good track of what is happening on the export side. We even get the estimates well before it is published. So if you want to receive that, that's not a problem. You can WhatsApp me. I'll give you the number later at the last slide. So if you want to look at exports, India and the subcontinent, which covers Sri Lanka, Nepal, Bangladesh, and Pakistan, the EU and China. These are the three main markets to analyze when it comes to export demand. So India and China, they switch. Some years, China is the number one buyer from Malaysia. Some years, India is the number one buyer. But these are the main three segments if you want to analyze and look at, if to understand export demand. So what does this chart tells us? It tells us that if there is any policy changes in India, it will have a major impact on Malaysian exports. So for example, if India decides, hey, we want to increase the import tariff, then you can expect an immediate knee-jerk reaction with CPO prices falling rapidly because the prospect of exports is lower now. Okay? If the EU announces and says we are going to ban the import of all palm products, then again you will see an impact. But say that the EU makes up about 20% of Malaysian exports, but the EU only makes up about 10% of global palm oil export. So that's another reason why whenever the EU announces, there is not really a significant impact on prices in the short and in the medium term. So the EU is actually a small time buyer in the global context. Okay, India is much larger buyer compared to the EU. Okay, exports, still looking at demand side. So this year, the main export market to watch for Malaysia is China. Okay, so Malaysia and Indonesia collectively exported about 7 million tons of palm products to China before COVID. So the big question here is, can China buy 7 million tons again? Since the COVID pandemic, the imports of palm oil by China has been below 7 million tons. So that means China buying of palm is below potential, And if China returns to buying big, will in Malaysia benefit? So far, the data shows Malaysia has not benefited. If you look at this chart, the red bar showing Indonesia export to China month, year-on-year basis. So we compare, if you look at the last bar here, we compare March exports, March 2023 exports compared to March 2022 export. So Indonesia export has been higher since October of last year. But Malaysia has been quite flat. Malaysian exports have been quite flat. And one reason is because of prices. Indonesian olive prices are generally about $15 to $10 lower than Malaysia's. Okay? And why olive? Because China mainly buys palm oil. They don't buy CPO. They mainly buy olive and some stearin and CPKO, but mainly olive. Okay. So China, another reason why China slowed down in buying is because of stocks. Stock levels in China, based on some data, shows that stocks are at a very elevated level. So China has a problem in consuming the stocks that they currently have. Demand has not really returned to China in China since the reopening from COVID-induced lockdown. So there is still a lot of olein that needs to be used in China in order for strong demand to come back. And if that happens, I think Indonesia will benefit strongly, but Malaysia's impact would be a bit smaller, just because of the volume that is available. Okay, over in India, so in China, stocks are data is a bit difficult to get, but Indian data is widely available, and you can get this data. So in India, edible oil stocks has been in surplus. So India edible oil stocks are very, very high at the moment, right? Very, very high at the moment. The stocks have been rising and being at surplus on year-on-year basis for the last 2 years. That means India has been buying and buying and buying, but domestic consumption has been slowing. Domestic consumption has been slowing. Why India has secured so much of edible oils, mainly made up of palm oil? One reason is because of the palm oil discount to bean oil was wide at about $400 at the end of last year. So because the spread was so wide, India took advantage and stocked up very well. But this also tells us that India may not be a good buyer in April, in May, and in June until the stocks are depleted. So these are the markets I just want to show you so that you understand the fundamentals on will China buy, will India buy. So that depends on the stock levels in the countries. So I've spoken about these, so I don't want to repeat this part. This is just basically showing you global palm production based on the USDA data. So the USDA, I just want to highlight these two. So you can look at MPOB data, Malaysian Palm Oil data, and also United States Department of Agriculture data, which is published around the 10th of every month. It is called USDA WASDE, World Agriculture Supply Demand Estimates. So USDA will publish the data for all oils, and they will give some commentary on the changes of the production, exports, and imports. So in that report, you can find what are the areas to look out for when it comes to other oils. For palm oil, you can look at palm oil analytics. For other oils, you can look at USDA. Okay, conclusion. Weather and supply are the two main swing factors in pricing in this year. So the weather is the El Nino, and supply is to do with the production and also export supply from Indonesia. Remember, Indonesia was holding back exports in order to meet domestic demand during the Ramadan period. Now the Ramadan is over, Indonesian government is encouraging more and more exports to go out of the market. Second point, palm oil prices are forecast to face upward pressure. So as you guessed, I am bullish that prices will and can rise higher still in the second quarter, mainly because of this El Nino induced support. El Nino is not officially here, but we don't have to wait until they tell us. We can feel it. The prices are kind of like, I think it's hot. Prices are also looking a little hot here, and many crops will be affected in Malaysia and in neighboring countries, not just palm. In the event of strong El Nino, production will be impacted from 18.5. It might even be lower than 18.45 million that we saw last year. Okay? But the impact will really be felt towards end of this year and the beginning of next year. Okay? High prices will not be sustained. So this I think will not be the case. So we will not see a sustained rise in prices because, as I say, if you have high prices, you will lose markets. That just happens, right? There will be demand destruction. So palm prices has to remain competitive. So that means palm has to remain the most and the best, the cheapest oil compared to other oils in order to maintain the market share. If palm prices are high, bean oil prices are low, people will not buy, number one. The other thing is you will start having the problem of food price inflation. Malaysian end month stock is the main determinant. I hope you agree with me on that one. Export demand to China we have to watch this space here. Although China's stocks are high, China is increasingly buying from Indonesia. What are the prospects of Malaysian exports to China? This is still unknown. If China buys big from Malaysia, we can see prices sustained and supported at about 4,200 and even 4,500, but not for very long. Last point, Indonesia policy changes. Number one, on the supply side, as I said, the export part, and number two, on the exchange. So some of you may be aware that the Indonesian government is trying to create a CPO exchange platform, just like Bursa Malaysia, in order to discover prices, but most importantly, in order to regulate the flow of exports from the country. So these policy changes, whether increasing exports or limiting exports, will set off price pressure in the second half of this year. So with that, I conclude my presentation. Here are all the references of the data that I've used. So there is no secret here. You can also go and look for the data and play around with it. And if you have any questions, anything you want to ask, you can message me on WhatsApp or WeChat or on my Twitter. And I'll be very happy to engage with you on the market and let you know of any future educational programs organized by Excel Learn where you can benefit. With that, thank you very much, and I will stop sharing now.